please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to our special show, Global Guru. Today our Global Guru is perhaps best described as the second most powerful money man in the world. He is the CEO of Bank of America, Brian Moynihan. Mr. Moynihan, thank you very much for joining us on CNBC TV18.
It's a pleasure to be here.
Thank you. Well, if you had come a few days ago, I would have asked you if we are in for a very turbulent year in the financial markets. But now the turbulence appears to have ebbed, and the Dow is already probably 3%. Look like a calm year to you, or will it be a volatile one for the financial markets?
Well, it started off with volatility, and as people repositioned, and after the holidays, there's always a period of something, and you see that people come back and move their money around. But it's stabilized, and in the end of the day, the market's going to reflect long-term the power of the companies, and the company's going to reflect the powers of the economy. And as you think about it, the world economy is growing. It's projected. We projected to grow at 3.7% for the 2018. The U.S. economy, we project to grow at 2.7%, and so those are good things, and so ultimately the market will reflect that. It may bounce around on the way there, but it will ultimately reflect it.
Have the markets got used to higher yields, or if 3% or 3.1 were visited, we could once again see volatility?
Well, I think the Treasury moves are a lot of factors there. It's what's going on in the markets, flight to quality, a view of where interest rates are going, a view of inflation, and all that gets factored in. But people have to keep in mind about the U.S. interest rate scenario. Since 1950, when they started quoting the 10-year, if you go back in Bloomberg and look at it, you'll see that across all that time, the amount of days it's ever traded under 3%, other than in the current period since the 2008, 2009, are very few.
Very few.
So the interest rate environment's very low, and the Fed is trying to normalize the front-end rates, as it's so-called, and the back-end rates will reflect that also. So I think people take a lot of stock, but it's only back to where it was a couple of years ago. So it was here 2 or 3 years ago, 14, I guess it was 3 years ago. Now moving to a 4, and people weren't that excited about then. It all comes down to what your views of inflation and growth are, and that's what you heard more noise about.
This year, at least in 2018, are we likely to see a lot more of, choppy markets?
Well, the reality is, in the United States especially, what you've seen is the duration of recovery is one of the longest known.
Yes.
And so, people then think that, well, around the corner something has to go wrong, but you have to back up and think about what's going on. Unemployment at an all-time low, wages starting to grow a little faster, the Tax Act coming in and providing a benefit to companies in both how they conduct business around the world, the territorial part of it, and lower rates in the United States, which helps provide more cash flow to finance activities. And so all that is very constructive for the markets, while at the same time, as usual, everybody always worries about what could go wrong, and that's what they look for. And so you'll see momentary ups and downs, and we came off of periods of unprecedented low volatility and unprecedented low rates. So the idea of the 10-year moving between 2.5 and 3 is not exactly a high interest rate environment, or the volatility moving back up to more normal levels. So watch it play out, but the reality is, in the end of the day, these markets and these things will reflect the status of the economies around the world for each of the individual markets, and it's pretty constructive. We have this year is a pretty constructive year for the markets in the United States and around the world.
Okay. It's just that when rates are too low for too long, there would be pockets of asset inflation. Where might you think, you can see the first signs of trouble? Would it be in the credit markets as money becomes expensive, or would it be in emerging markets?
Well, it's going to be all those things, and so we're going to know after it's all over. We'll look back and say, well, that was a pocket where rates where something was overvalued or not. And so when you run a big company like we do, the question is, we try to make sure that we're positioned so that no matter what happens next, we're in good shape. And so as we think about it, whether it's in our corporate investment banking business, our markets business, our consumer businesses, we try to, all things in moderation, run the company with responsible growth, as we call it, and avoid the pitfalls when markets move up or economies move up and down, and that's what we focus on. So I'm not sure what will cause it. I'm not sure what we'll look back and say that was too high or that was too low. Something will be. But the reality is, what you do as a CEO is position your company going into that nothing is going to hurt it too badly or cause too much trouble.
Okay. Any thoughts on emerging markets itself? Will they be particularly vulnerable, you think?
Well, you know, we're very constructive on India, and our research team, which is one of the best in the world, has India growing at 7.5% this year. Your Prime Minister and the policies and the activities have gotten the economy growing, and inflation's lower, and so GDP growth is projected to be higher, inflation's projected to be in check. Those are very good things, and so we're very constructive here. We're constructive on China. We think it's 6.5% growth, and that seems to be working through. And the good news for the world is that Europe is actually growing a bit. It's not an emerging market, but going from negative to positive the last couple of years is a good thing. And so that, as they call it, sort of synchronized growth around the world is something we haven't experienced in a long, long time.
Okay, so can I take your prime world view at this point in time to be that there'll be minor volatilities, but otherwise 2018 would be a smooth year?
As long as we see what we think we see, yes, it will be.
Okay. Just coming back to India, we've had these intermittent problems. First, the bad assets, which could accelerate a bit more. Right. And we've had this bank fraud from one of the banks. Would you worry about these things?
Well, I worry about all those things. I worry about and you're not unique. There are frauds that go on around the world, and our job as financial institutions to try to make sure we're doing the appropriate due diligence to understand them. And so I don't know the particular details of this one other than what I read in the paper and on your station. But, you know, at the end of the day, our job is to do great due diligence on clients and customers and on correspondent banks. And I think, you know, we'll continue to do that. But frauds are an unfortunate part of the business we're in. And what you want to do is do the work so that they happen few and far between. And when they do happen, they won't have a major impact on your company.
No, I mean, it's not a big fraud if you looked at the percentage. I mean, it's, I think, about 200 billion rupees for an industry that's over $1 trillion rupees. I mean, would you say that this is one-off, or what do your clients tell you? Are they worried about any part of Indian banking?
Well, I think everybody worries, and what will happen is the reaction to a situation like this, the couple situations have been in the paper, is everybody then sits back and is more careful with the banks involved and the quality of due diligence of what we do, and that tends to slow things down. And that's not good for a country like this country that needs capital and needs investment and needs velocity to grow an economy at 7.5%. Things have to happen, and if the banks around the world get worried about the amount of due diligence in terms of transactions and things like that, that is not good. But I think, like with everything, for a while, and then it'll kind of get to new normal and kind of work out from there.
Have you heard about our bankruptcy code? It's a new law. It's just about 18 months old. Are you impressed with the way things are progressing on the bankruptcy front?
I'm not as familiar with that piece of it. When we look at the country, you know, how we think about India is we have a global corporate investment banking. Kaku Natake runs our environment here is terrific, and so she has, you know, corporate clients and markets clients and capital markets, taking people to markets and raising debt and equity for them. And so, you know, hopefully the bankruptcy code is not part of what we are doing for those clients. And okay. great scheme is maybe other than helping them acquire some companies, so I'm not that familiar.
Oh, right. You're not looking at stressed assets, you're looking at unstressed assets in India. Yeah. Well, there's plenty of that. But, okay, let me come back to the US-India issue. Right. You know, we've just had recently statements coming out from President Trump condemning India for the 100% tariffs it levies on Harley-Davidson bikes. Right. Generally, there have been many instances of the US raising tariffs on a few products, and India as well doing much the same. Would you worry that that might be a problem in 2018 for growth?
Well, I think if you think about global corporate citizens, our clients and customers that engage in worldwide trade and worldwide manufacturing, they are free trade and they're for open economies from both ownership of assets and production of assets and sales of assets, and they're sort of against things. And why wouldn't they be? Because they're trying to sell, manufacture and acquire raw materials, turn them into products and sell them in countries. And so, you know, that's a strategy. Now, I think that, you know, the President's been clear about his view, and Secretary Ross have been clear about their view of the equivalency of some of the things that you spoke about. But I think, at the end of the day, the globalization of the world's economies is already done. Now the question is how discrete nations adjust to that, whether it's our nation or whether it's India or whether it's China or whether it's Brazil or whether it's Europe, various European nations, whether it's what happened in Brexit. So all those are factors. But at the end of the day, the corporate world wants free and open trade and fair trade so that they can conduct business, because they're all wonderful markets and they can bring wonderful goods and wonderful capabilities and employ people and help people's lives become better if they're given access. And the competition will then play out as to who can do the best job.
Okay. You don't expect trade barriers to be you know, one of the hurdles to growth. That won't be the big bad story of 2018.
Not in the near term. Not in the near term. You don't see anything on the horizon that will cause that. Just because there's not much being done. There's a lot of talk, but there's.
Okay.
But I think the question is, long-term open trade is a key element of all nations.
We have seen crude, for instance, stay above $60, threaten to go beyond even 70. Will this be a year when we have to worry about commodity inflation?
Well, I think you have to worry about commodity inflation, especially in this country, because of the nature of the import side of it. In a country that's a producer like America, that's not the worst thing. And so, although it reverberates through your economy, but I think the price range the oil's in now is relatively constructive for the world. And I think it's moved up a little bit and it's moved down a little bit. But I think our experts have it in a range of sort of where it is now, up to $60 to $70. The United States is producing a lot more. Other countries will step into that production. And so I think, these levels, it's not concerning. But not only commodities, but wages and other things. You always worry about inflation, and that's the one thing that, has caused some worry recently in the United States. They couldn't find inflation for years, and now they're starting to see it, and now people are worried about it. So it's the classic sort of market swinging back and forth, and we'll get through it. But I think we don't see massive we don't see in the United States underlying trends of inflation that concern us. Wage growth is solid. But it's in control, and commodities prices are relatively constructive. And so, I think the long term is okay. Now, it is something that the central banks around the world have to be very watchful of.
Okay. Well, what about the tax cuts itself? I know opinions range from the left to the right across the spectrum, but is it likely to lead to a lot of dollars coming back to the United States? Well,
you have to step back and say structurally what the United States corporate environment, the corporate customers and everybody wanted from the tax code was a territorial tax, which meant that the United States was really the only country without a territorial tax. So you had these wild gyrations in how tax would occur depending on where your headquarters was, depending on where some operations were, depending on where the intellectual property was. So it was really complex. So one is you want a territorial, and the second is we needed a rate that was competitive. And so in this latest round, the corporate middle market companies, large companies in the United States, are very pleased with they've gotten both pieces. So that then paves the way for free flow of cash and not trapping cash outside the United States. So it will come back, and people have already announced that. But really what it paves the way for is as companies look in the future of how they're going to make a decision, tax becomes less of a question, and it more becomes driven by the capabilities of the country, the market of the country, the size of the market, what they can do, as opposed to I'm doing this for tax purposes. So I think as you see this play out, it'll be very good for America. And by the way, you're seeing people react to it. So in our company, 90+% of the employees on a worldwide basis received a benefit because of the benefits we shared with them from the tax changes and how they affect our company. And so that was a worldwide program we did. Other companies have done the same. So there's been an instantaneous benefit to teammates around the world for all of us.
How do you think the dollar will move? I mean, if you're going to see a lot of dollars flow back, the dollar has been, remarkably cheap, if you please, compared to most other trading partners. It's been low, and the United States probably likes that. Do you expect the dollar to remain weak, or do you think there could be...
This, again, is sort of there's always a spot price on a given day for what's going on. But if you think about it long term, the currency value of a country is reflected by the strength of the country, and the United States will be a strong country, and I think the dollar will be a strong relative currency over time. But in the near term, you'll see trading fluctuations what people get really excited about. But long term, it'll be a strong currency.
How do you think this entire payments, Google Pay or, Apple Pay, are all these going to be very disruptive for traditional commercial banks like yours?
Well,
and the ones in India.
So if we think about what we do in the United States, we work with all those companies. So Apple Pay, Google Pay, Samsung Pay, we work with PayPal, we work with all of them. And so in the end of the day, you have to step back. And so we are the largest consumer bank in the United States. We have 25 million mobile customers, 34 million or so digital customers. More than half our payments are already digital today. And so what we're trying to do is provide more and more customer convenience. And so our partnership with all those companies you mentioned is to help drive, customer convenience. So a consumer can use whatever, if they want to use their phone to pay, they can. If they want to use their credit card to pay, they can. If they want cash to pay, they can. And so we're driving all that high technology implementation. We also have Zelle, which is a P2P payment system, which is growing 100% a year. And we're a significant part of the volume in that in the United States, and it's a significant part of what we do. When you add it all up, we still have a lot of cash in the United States. Okay. We still have a lot of checks written in the United States. We still we have a lot of wires. We have a lot of ACH. We have a lot of debit and credit cards. And so consumers use everything we give them, and we are going to plan to give it all to them. And over time, we will provide them more and more convenient, and that's where all those things fit in.
Do you think wallets will survive, or do you think networks will take over?
Well, just to give you a perspective, our customers make about $2.5 trillion of payments, our consumers, a year.
Okay.
The entirety of all that activity that you're talking about is probably about 1% or 2%.
Oh.
So it's got a long way to go. And so debit and credit cards are about half that volume. Checks are about, debit and credit cards about 25%. Checks are still 25%. So customers use everything under the sun, and we're happy to have them use it. Over time, it will change, but right now, those things are growing fast, but it's going to be significant amounts of time before they become major parts of the equation. And so we already disrupted ourselves. We already have all that, going back to your disruption point. Now the question is, how do you get the customers to use what is most convenient for them, and also what is the easiest and for the system?
Oh, in India, of course, we are looking at this as a very big sunrise opportunity. Right. India is a very, very cash-using country. So we are hoping, of course, that digital will mean leaving digital footprints to which we can apply big data and maybe sell more, targeted selling of loans. You see that kind of an opportunity?
Oh, in India, I think you have the opportunity because of the work the Prime Minister did to create the bank accounts for everybody and the biometric identification. Yes. The combination of those factors to allow the distribution of the subsidies, the movement of money, and the ability to pay, those are very powerful things. You're, to some extent, leapfrogging the development because of just the way your society is developing. In the United States, every day, over the tellers or through the ATMs, about $500 million of cash goes out to Bank of America consumers. So, we have a society that's used to checks and used to cash, and so we'll move all that along. But you guys, you and your country, and through the leadership of your government, has made great steps that will be beneficial and will allow you to move faster along some of these dimensions, because you aren't changing the customer behaviors as differently as we're dealing with the United States. And so, remember, the Visa MasterCard system is a very efficient system. It's hard to compete against it. You walk in any place in the world, you hand them this card, and they give you a dinner, or they give you a hotel room, or they give you merchandise. That's a very fantastic system, but it was built. It was a Bank of America card originally.
Yes,
it was built by one of our predecessor companies. And it takes a network to make it effective. To beat that out, you're going to have to come up with a better network. That's a pretty efficient one right now. And so the question will be, some countries will do different things, but largely the payment things will move over time to where you think you may use a device to get that same access to the payment system, but over time, it'll take a long time before the installed base changes much.
Okay, so cards are not going away anytime soon. What about cryptos? I mean, I read some of your comments about them. Do you see that as a danger? Can it upset the apple cart in the sense, a big loss over there can create losses in the banking system?
I wouldn't. I'm not sure that would happen. I mean, there's been losses.
What's your biggest worry about cryptos, if at all?
It has nothing to do with digital payments. 53% of all the payments made by Bank of America consumers today are made digitally, and that doesn't count a credit card swiped at a point of sale. So, more than half the payments are digital today. So, it's not a new concept to have digital payments. The idea of a distributed ledger is not a new concept. The registry of deeds, where people's land ownership is registered in countries around the world, is a distributed ledger. The stock ownership in DTC is a distributed ledger. So those are not new concepts. The electronification of those concepts, the so-called blockchain technology or related technologies, is very important. The further digitization of cash is very important, as we talked about. the question of anonymous movement of money, that's where it gets interesting, and that's where governments have to think about that question, and you can see them struggling with that issue, which is, one of the ways that you control use of money for bad purposes is to have low denomination bills. Therefore, to do anything in size, you have to carry a lot of bills. So, $1 million in $100 U.S. dollars is a lot of money.
Yes.
It's hard to carry. It can be smelled by dogs at the border. It can be smelled by dogs in the center city, at an airport. It carries residue. And so there's a reason why the United States moved its monetization down to $100.
Yes.
And so we have to think through before we allow the anonymous part of the currency. That is different from digital currency.
Yes.
That's different from blockchain. And people get them confused, but the anonymous part's the part that people have to look at and think about.
So blockchain is more likely to prevail than cryptos, you think?
Well, there'll be digital currency.
Okay.
It's just that it'll be done, I think, in verified ways that people know who has the currency and who owns it. And that's, by the way, that goes on every day.
Yes.
The wire system that sends out, trillions of dollars a day
Yes.
for a company like ours.
Yeah, but they are
That
verified. They are verified, KYC done
Yeah.
transactions, unlike in cryptos, which is the worry, I guess. Brian Moynihan, it was a pleasure speaking with you. Thank you very much for joining us
Thank you.
on CNBC TV18.